The first learning objective is to identify the purposes of the statement of cash flows. The statement shows where cash came from and how it was spent. Looking at the very bottom, notice that the statement shows the prior year cash balance, $42,000, and then the current year cash balance, $22,000. And up above here, it tells you the net increase or decrease. So what this statement is telling us is that the cash decreased by $20,000 this year. So why did it decrease? Well, there's three main sections of this statement of cash flows. There's the operating activity section right here. This is cash flow, either positive or negative, that came from our main business operations, buying and selling. So in this section, we have positive $70,000 cash. So we have positive cash flow from running our business, the main activities. By the way, of the three activities or the three sections we're looking at, the operating activity section is by far the most important. Then let's look at the investing activity section. We notice that our subtotal for this is minus $260,000. What this means is we have spent $260,000 in investing. And let's look to see what our main cause of this was. Well, we're acquiring plant assets. So the company is investing in itself. And then the third section is financing activities. This is borrowing money, stuff like that. And let's look at this subtotal. We have positive $170,000. So what this means is we have positive cash flow from financing activities. And if we look at these areas, it looks like our main source of cash is issuing common stock. Notice we also issued a note payable. So what we get from this statement of cash flows is cash went down $20,000. We have positive cash flow from our operating activities. We are investing in ourselves by purchasing plant assets, and we are issuing stock and taking on some debt to also generate some positive cash flow. So this statement will report why cash increased or decreased during the period. Again, how much did cash increase or decrease during this period? At a $20,000 decrease. And notice this statement covers a certain time period. In this case, it's for the year ending 2016. So what this statement is a communicating link between the income statement and the cash reported on the balance sheet. According to the balance sheet, what is the ending cash balance for 2016? $22,000. Now let's look at the statement of cash flows. What is the ending balance of cash for 2016? It's the same number, 22,000. So what the statement of cash flows is doing is it's matching the ending balance of cash from the balance sheet with the same number on the statement of cash flows and explaining to you why the number either went up or down for the year. Also notice the statement of cash flows starts with net income. So what the statement of cash flows is doing is it's explaining why net income, $40,000 in this case, from the income statement does not equal the change in the cash balance. In essence, the cash flow statement is the communicating link between the accrual-based income statement, which is this number right here, and the cash reported on the balance sheet, this number right here. So how do people use the cash flow information? Well, the statement of cash flow helps to predict future cash flows. Past cash receipts and payments help predict future cash flows. It also helps evaluate management decisions. Wise investment decisions help the business prosper. Unwise decisions cause problems. Investors and creditors use cash flow information to evaluate managers' decisions. If the company's only source of cash is selling plant assets, the company could be in trouble. You can't sell plant assets forever. And it also helps predict the ability to pay debts and dividends. Lenders obviously want to know whether they'll collect on their loans. Stockholders often want dividends on their investments. And the statement of cash flows helps make these predictions.